Hi everyone, and welcome back to the channel. Today we are diving into a topic that's been making waves across the tech world. It's the AI bubble in the West bursting. And more importantly, how does this compare to the AI landscape in China? Are they facing the same problems, or are they on a completely different trajectory? Let's break it all down. If you've been following the news in early 2026, you've probably seen a lot of grim headlines. Reports are swirling about plummeting stock prices for companies once hailed as AI darlings, widespread layoffs in the tech sector, and a growing chorus of experts declaring that the long anticipated AI bubble is finally popping. One article from January 2026 starkly describes the situation. Stock prices for AI darlings have plummeted, layoffs are rampant, and whispers of a bubble burst have turned into full-throated screams. The core issue seems to be the massive gap between the hype and the reality. For years, investors poured billions into AI startups and projects based on promises of revolutionary change and near instant profitability. But now, many of these companies are struggling to show concrete returns on that investment or to integrate their technology into real-world, revenue-generating applications. The market is starting to ask tough questions. Where are the earnings? Where is the productivity boost? This disillusionment is what fuels the fear of a bubble burst. Now, let's shift our focus to China. On the surface, both the US and China are global leaders in AI, but their approaches are fundamentally different. The Western, particularly the American, AI ecosystem has been heavily driven by private companies and venture capital. The focus has often been on large general-purpose models and a move fast and break things mentality. However, this has led to concerns about a lack of long-term strategic direction and over-reliance on hype cycles. In contrast, China's AI development is characterized by a powerful combination of intense private sector competition and strong coordinated government support. Chinese firms are known for their rapid iteration and focus on practical, accessible applications. They built a robust domestic ecosystem that isn't as dependent on the whims of international markets. Furthermore, China is now leading the world in AI research output, publishing more papers than the US, UK, and EU combined. Their core AI sector is valued as nearly 600 billion yuan and is projected to grow steadily at a compound annual rate of 15.6%. That leads us to the critical question. Is China facing its own AI bubble that's about to burst? The evidence suggests not. Analysts point to a key difference in financial discipline. A report from UBS Securities in late 2025 argues that China's tech giants are keeping their AI spending in check, avoiding the kind of reckless circular financing that can inflate a bubble. Their conclusion is clear. It is unlikely that there will be an AI bubble in China. Instead of a bubble, China appears to be experiencing a period of massive strategic investment. For example, Alibaba has just announced a staggering 50 billion AI investment over the next 3 years. This isn't speculative gambling. It is a calculated bet on infrastructure and future growth. This is backed up by real user adoption. China just reported that its number of generative AI users has skyrocketed to over 600 million, a 141% increase. This shows a strong foundation of actual usage, not just investor hype. While the successful launch of a Chinese chatbot like DeepSeek did cause some brief market jitters in early 2025, it was a sign of competitive strength, not a symptom of an inflated market. So, what does that leave us? It seems we are witnessing a great divergence. The West, after a period of intense hype and speculative investment, may be entering a necessary phase of correction, a reckoning, as some have called it. This could be painful in the short term, but might ultimately lead to a more sustainable and grounded AI industry. Meanwhile, China's AI sector appears to be on a different path altogether. Fueled by strategic national policy, disciplined corporate investment, and massive domestic adoption, it is building a formidable and resilient AI ecosystem that doesn't seem to be suffering from the same bubble-like conditions. The race is far from over, but the rules of the game are changing. The future of AI might not belong to the loudest hype machine, but to those who can build a solid, practical, and widely used foundation. What do you think? Is the AI bubble really bursting in the West? And can China maintain its current momentum? Let me know your thoughts in the comments below. Don't forget to like and subscribe for the more deep dives into the tech world. See you in the next video. Thank you.